Hi, I'm Eric Burkholder here with Jordan Bradford with Burkholder Wealth Management, and today this video we're going to talk about education planning and back to school. We're just a few weeks away for most people
Yeah,
from school starting, and so we thought it'd be a good time to brush off the education planning info and give everyone kind of a recap or a summary of what the available options
hmm
are and what some strategies are out there that you can utilize.
yeah. There's obviously a lot of different avenues to pay for education, and this starts even as early as kindergarten through 12th grade, and college as well. So whether your young child is going to be in K through 12 or going into college, or even already in college or in any of those grades, this is still a great time to assess your education planning strategies that you have in place and see what other options may be available where you could be leaving some money on the table.
Right. So let's start from kindergarten up through college, and we'll kind of hit some highlights. So a lot of times people think of education planning as well, college, that's a long ways off, but I think there's some strategies you can start implementing now and
Yeah.
even use during K through 12. So what are those?
Yeah, well, the big one is the relatively recent update to 529 plan rules that allow for you to use up to $10,000 per year per student for K through 12 private education. And this is a really cool tool to have, especially for grandparents who've maybe socked away some money for their grandchildren, for education, for college, but maybe those kids are going to be going to a private school for K through 12, and grandma and grandpa want to help with the education costs there. Even if you don't even have that set up, one simple measure that you can use to take in order to help kind of offset that cost of K through 12 private education is to use a 529 plan to essentially just funnel your tuition payments through. And there is a minimum time period you have to leave those funds in, but it's not very long. You just put the money in, leave it in there for about 10 days. You can pull those funds out and then go ahead and send them directly to the institution. So if that is a private third grade school or a university, in state, out of state, that's going to be acceptable. You're going to be able to use those funds for that. And that $10,000 limit only applies to K through 12.
Mm-hmm.
So that's really important to note because you may have be listening to the start of this video and think, well, what kind of college is only going to cost me $10,000 per year? And there aren't a lot of those.
Right.
There are some, but that's certainly not become the norm these days.
Yeah, and important to note the reason why you maybe want to float through the 529 through K through 12 is for that state tax deduction.
Yeah.
Up to 20,000, well, 10,000 per, up to $20,000 of income,
Right.
if it's married filing jointly. So,
and that's on your contribution side.
correct, right. So, if you're going to pay that money towards private school, you might as well get some state tax deduction for it.
Exactly. And then, of course, this only applies if you live in a state that has state income taxes. So, if you live in Oklahoma, we do have a state income tax, so this would be applicable, and you can save dollars immediately upon utilizing that for private education. If you live in a state like Texas, however, there's no state income tax, so that benefit really isn't there. But you also don't pay any state income taxes, and that is a larger benefit than saving just the tax, of course.
Yeah, and one thing we do also talk about if someone's going to utilize the strategy for K through 12 is the investment option. So certainly money that's in there for college should be invested more aggressively. And if it's just going to flow right in and out, right, you probably want to make that go to like the cash vehicle, and make sure you keep those two goals separate, right? You don't want to hurt your college education savings to pay for private school, and so we work through that with clients on making sure both those goals are still being met.
Right. And if it makes it easier for you, you can have multiple 529 plans open, even with the same custodian. So a big one in Oklahoma is the OK 529 plan. You could have two plans. One you've set aside for education funding that's invested a little bit more aggressively, because if you have a 3-year-old child, you're thinking, okay, I need about 15 to 19 year runway to use those funds. But if you're thinking, hey, I also want to send my 3-year-old to a private kindergarten, Well, those funds should probably be invested very, very conservatively because you may only have a 2-year window before you're going to need to start using those funds.
Right.
So you just want to kind of think about that and make sure that you're earmarking the dollars for the right purposes and not commingling it too much to the point where you've lost money just because you've invested a little bit too aggressively and the market was down for 1 year. Then you're going to eat away at the tax savings you had anyway.
Yep. And one more note on the K through 12 in private school. Obviously, in Oklahoma, there's some laws that have been passed that will give some tax tax rebates for people who are sending their kids to private school. We would caution people that obviously would be a great benefit to you if you already have kids at private school. If you're making decisions based on being able to afford school with those credits, I would caution everyone out there. It is a recently passed. There are lawsuits already starting, so I think it's risky to bank on that.
Right.
If you weren't going to budget for private school before, just be careful. You don't want to get your kids a few years into school and then find out that credit goes away and you can't afford it.
And I think it's just a good rule of thumb in general to never rely on tax deductions or credits to be your driving force for decision making when it comes to education or really any other financial matters. You want to take advantage of the opportunities available, but you don't want to put yourself in a position where all of a sudden you can't afford the lifestyle that you've chosen because a new government has changed a certain tax code and now you can't afford that payment anymore. So just, use all this with a grain of salt and just keep that in mind.
Right. So, that's K through 12. But now, a lot of people have kids going off to college for the first time. And so the financial cost is even higher, but also there's some more, the financial opportunity, I would say, is greater as well.
Yeah. So if your student is going to be attending college in the fall here, chances are you've already gone through the FAFSA to apply for any financial aid that you might acquire. But if we rewind just a little bit, let's say you have a senior in high school coming up, or even a junior in high school, because at that point in time, you're going to start taking the, whether it's the ACT or the SATs, starting to get prepared for which college you're going to choose, and then also looking into that financial aid component. One thing I would note is if you're looking at financial aid, keep in mind that the way financial aid is calculated is relatively complex, but they're going to take into account a higher percentage of your children's assets than they are the parents' assets. So I see a lot of common misconceptions will be mom and dad will say, hey, I know that we make a lot of money or we make too much money for a lot of financial aid. So let's put some of our assets in our children's names so that we don't look as wealthy. And that's a really big mistake because what the FAFSA will show after you go through that process is that they're going to take into account about 20% of a child's assets and assign that to college education. Whether that's what you use it for or not, it doesn't really matter. And the amount that they assign to parents is closer to about 5.6% roughly. So they're taking into account less of the parents' assets than the child's. So, never just give money to your kids just to try and get them to qualify for more financial aid, because you'll actually be doing quite a bit more harm than good there. And 529s are not a child's asset. They're the beneficiary of the asset. So that's a good thing to keep in mind that, I don't want you to take from this, hey, we shouldn't have a 529 because that's our child's asset. They're actually the beneficiary of the asset technically.
Right. So 529s are a great vehicle. And if you were thinking about gifting your kid $10,000 or something as a graduation gift, you may consider putting that into the 529. It will help them out for college.
And there's also some fun stuff too. This is really for a lot of times I would say this is like advice to grandparents, right? Let's say you've done a great job of saving. You're not going to run out of money in retirement. You've got a great solid financial plan. You're looking for ways to give money to your kids or grandkids. If you make contributions directly to your grandchildren's or children's education, or to their institute of education. So let's say they go to the University of Oklahoma. If you write a check directly to the University of Oklahoma for tuition, you don't have to worry about filing gift tax returns or having that affect your estate taxes at all. Now, a lot of people probably aren't going to be in the boat of having to worry about estate taxes as of today.
Sure.
But those laws can change at any point in time. At one point, that exclusion limit was only about $1 million per person, which still is a lot of money, but in the grand scheme of things, there'd be a lot of people who could cross over that 1 to 2 million mark and have to be worried about that. Right now, it's for a married couple a little over 22 million. So you're probably thinking, I may not be in that boat, but if laws do change, you want to make sure that you're thinking about that. So if you're a grandparent and you want to give money to your grandkids for education, I'd write the check directly to the institution before you write the check directly to your grandkids. Doesn't mean you still can't gift your grandkids some money, but if you want to be really tax efficient for everybody, just write that check directly to the institution. That's going to be way easier and way better for everybody on the tax side of things.
Right. Yeah. It's little things like that we often overlook, but can make a difference.
Yeah.
And you just want to do everything in your power to do the best thing from a tax perspective, and obviously saving money and paying for college.
Yeah.
Another thing, we talk about is, as a parent, you are the best advocate for your kid. And so, I mean, there is a lot of aid that's left on the table. People see the sticker price of college going up every year. And actually, studies show the out-of-pocket is not quite as bad as it seems if you get all the available, grants and aid that are out there.
Yeah.
And so it's so important not to rely on the admissions office or anybody like that to come to you. I mean, you as a parent, you really have to start looking for those opportunities to apply for grants. Definitely reach out to the university financial aid office and see what might be available, because a lot of money is just left out on the table.
A lot of times the guidance counselor's office at your high school, your child's high school, can be a great resource, and encourage them to ask and just say, hey, what type of grants or scholarships could I potentially apply for? And as Eric mentioned, there are a lot that get left on the table. And it doesn't matter if you are a straight A student or you're just getting by with enough to be able to actually potentially apply to a college. There are different grants, different scholarships available for all sorts of different situations. So don't think that just because of your grades or income or some combination of the two that you just naturally won't qualify, because you'd be really surprised what is available out there. And it makes a lot of sense. If you can try to save, $5,000 a year even, if you have 3 kids, that adds up really fast. That's $60,000 of savings if you can save $5,000 per kid per year.
Right.
And I promise you, there is a lot more than that available if you know where to look and you really just try to find good scholarships, good grants. Sometimes even your own employer might offer some sort of a grant or scholarship opportunity for kids. So it's important to ask good questions, and you'll find there are a lot of opportunities out there still.
Absolutely. And then kind of I think a good place to end or summarize would be, on paper, I think a lot of times education planning looks pretty straightforward. In reality, it's not the case, and a lot of times people are making some trade-offs at this time of, do I pull maybe some from money that's set aside for retirement? Do I try to cash flow the difference? Maybe I haven't quite saved enough. And that really needs to be put into a plan. And because there's often trade-offs. We often say, there's many ways to pay for college. There's only one way to pay for retirement. And so just, parents love their kids. They want to pay for college, but you really need to make sure your retirement plan fits with your education plan as well. And that's where putting together a plan makes a big difference, to really know what are the implications of how I pay for my kids' college, what accounts I take it from, do I take it from cash flow, all those things. And every family is different. And so that's not just a calculator online you can plug into.
It's just like when you fly on an airplane and they tell you every time, you put your own oxygen mask on first and then you help your kids, right? You're going to be of no use to your kids if you pay for all of their education, but it's at the complete detriment of your own retirement. And then when they're out and working and growing their own family. Now they got to take care of mom
Right.
and dad. So, just make sure that you've got a good, sound financial plan. And if college planning is really important to you, even if that's your number one priority, it still is important for you to have a personal plan so that you can better understand what you're capable of doing for your kids. It's going to be better for you, it's going to be better for your kids, and it's going to really create a better overall healthy financial environment for your family.
Exactly. So I know we hit highlights today, but it is the season for back to
Mm-hmm.
school. So if anybody out there has questions, we're happy to answer and talk through with you. So don't hesitate to reach out. And if we don't hear from you now, we'll see you on the next video.
Yeah, thanks
All
for
right.
listening.